Even though Bitcoin's price has been volatile recently and has had a recent fall, many industry experts continue to believe that the cryptocurrency is on its way to surpassing the $100,000 barrier. However, perspectives on exactly when this will occur differ widely. A recent survey conducted by Deutsche Bank indicated that almost 1/4 of Bitcoin investors anticipate that the price of Bitcoin would be greater than $110,000 during the next 5 years. Welcome to your very own channel Crypto News. Today we are going to talk about expert predictions for the future of Bitcoin. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. When it comes to investing a portion of their portfolio to cryptocurrencies, experts advise new investors to proceed with extreme caution due to the market's historically high volatility. This volatility has been around for quite some time. Bitcoin's value has increased throughout the years in a manner that is comparable to that of every other cryptocurrency now available on the market. Bitcoin investors have every right to be inquisitive about how high the cryptocurrency's price is capable of going in the long run. What is currently causing Bitcoin's price movement? After the Federal Reserve signaled further interest hikes at an economic symposium in Jackson Hole, Wyoming, the price of Bitcoin dropped below $20,000, decreasing by more than 5%. Jerome Powell, the chair of the Federal Reserve, stated during a speech on Friday that the U.S. Central Bank will use its instruments forcefully to combat inflation, which is now hovering close to a high not seen in the last 4 decades. Bitcoin has been exhibiting some signs of stability as of late, according to Edward Moya, a senior market analyst at Oanda. However, the market may not be completely out of the danger zone just yet, with Bitcoin's price dropping below the significant price threshold. According to him, the majority of the crypto community is still suspicious of the Bitcoin comeback that started in mid-June. As a result of growing inflation, a wobbly stock market, and rising interest rates, many investors are feeling negative about the economy, which contributed to the crash of the cryptocurrency market in June. The crisis was triggered by a sudden de-risking from Wall Street. In recent months, there has been a growing correlation between the cryptocurrency market and the stock market, which has further strengthened the sector's ties to many aspects of the global economy. Martin Heisbeck, the head of blockchain and crypto research at Uphold, believes that investors are still apprehensive about the long-term survival of the cryptocurrency business after several prominent crypto firms froze withdrawals, eliminated jobs, and tried to stem losses in the past few weeks. He believes the price of cryptocurrencies is much more susceptible to elements that are contributing to the challenging economic scenario than the decline in the crypto ecosystem itself. According to Heisbeck, the market remains vulnerable and on edge, and not necessarily because of risks from additional crypto ventures going under, but rather because of the horrible economic scenario we are facing right now. To put it another way, the price of Bitcoin is more dependent on the supply of gas to Germany than it is on any crypto-related news or metrics. According to the opinions of various analysts, the fact that there is no sign of an end to the war, inflation, and altering monetary policy in the United States will likely continue to create additional volatility in the coming weeks and months. Bitcoin's price hasn't been above $50,000 since the 25th of December 2021, and it hasn't been above $45,000 for more than a few minutes at a time over the past 6 months. The present price of Bitcoin is still quite a ways off from the latest all-time high it reached in November, when it soared over $68,000. But despite the recent drop in price, Bitcoin is still more than twice as valuable as it was only a couple of years ago. Bitcoin price predictions for 2022 between $10,000 and $28,000. The price of Bitcoin is notoriously difficult to forecast and is considerably more sensitive to changes in market conditions than more conventional asset types. But despite that, we thought it would be a good idea to get the opinions of some specialists on what 2022 might hold. As with the stock market, the first half of 2022 has been a rough one for the cryptocurrency industry. As a result of a slowing economy, greater inflation, and rising interest rates, investors have begun to shy away from assets that carry a high level of risk. According to a research conducted by Deutsche Bank, the price of Bitcoin may reach $28,000 by the end of the year. This prediction is based on the fact that Wall Street is currently experiencing a bear market, and analysts anticipate that it will continue for a few more months. Meanwhile, the consensus of 53 industry experts polled by Finder indicates that the price of Bitcoin will exceed $25,000 before the year 2022 is out. However, the opinion of one industry professional is that Bitcoin has not yet reached its yearly low price. Because Bitcoin has a history of correcting by as much as 85% in previous bear markets, cryptocurrency market researcher Wendy O anticipates that the price of Bitcoin may go as low as $10,000. According to O, if the largest cryptocurrency experienced a correction of 85%, it would fall to around $10,000 from its all-time peak in November 2021, which was approximately $68,000. Nevertheless, there are likely to be some obstacles along the way. According to O's technical analysis, Bitcoin is facing multiple levels of resistance. As a result, it is highly likely that Bitcoin will see a violent reversal upward before reaching its absolute bottom this year. What investors need to know about Bitcoin price projections. Financial planners and other specialists warn against making emotional decisions based on Bitcoin's price volatility. Dollar cost averaging helps investors who invest consistently in passive index funds and ETFs. Experts recommend not spending more than 5% of your portfolio in Bitcoin and never investing at the expense of emergency savings and debt repayment. Cryptocurrency is a minor element of diverse assets like low-cost index funds for long-term wealth and retirement savings. Even with crypto, set it and forget it makes. Certified financial advisor Sarah Catherine Gutierrez of Arkansas explains that passive investing is valid. Since crypto is still new, it's okay to wait before investing. We only have 10 years of data to estimate crypto prices, and Bitcoin's value is highly volatile day to day. Volatility makes it difficult to determine your crypto strategies, what and why. Before investing in Bitcoin or other alternative assets, consider yourself what you want to achieve. Gutierrez believes people do not know how to value Bitcoin. When buying, determine what value you expect from it. Gutierrez says financial advisors aren't biased against Bitcoin if a customer is interested. You should consider whether crypto is needed. Gutierrez says no often applies. She argues the average person should pick straightforward, easy to understand investment methods over Bitcoin. This can help you reach your financial objectives and ensure a healthy retirement. If you made it to the end of this video and are interested in knowing more, let us know which part of the video you liked the most in the comments section below. We appreciate your comment and will work to make a video on your desired topic with an account shout out. Please like and subscribe to the channel and hit the bell button to be notified of our next video. Thanks for watching.